Hey everybody, good afternoon. Welcome to 12-Minute Trading. Today is Monday, the 28th of April. Welcome aboard. My name is Doc Severson. I am joined over here by Dave Lukas here today. And as the thumbnail shows, I think we have a volatility exhaustion in the market after what we've been through over the last 3 to 4 weeks. Really after Liberation Day, liberated a lot of people from their capital. So we'll see. Not us though. We've been actually doing quite well in this environment. So we're using this volatility to our advantage. Now the question is, how much longer will it be around, or is this just a pause before the next round of volatility? So we will show the different. Uh, if you ignore all of the news that's going on, so we'll talk about all the news, we'll talk about all the different catalysts that are out there in the market right now. But if you take those all away, and if you just look at the price, there's two very clear outcomes that will probably, one of which will be picked in the next, I'd say, 2 weeks, and it will set the tone for the rest of 2025 and what we're seeing. So I can't wait to get into that. Dave, what are you seeing out there?
Yeah, similar thing, right? We're at that inflection point again. So we've come up to 5,500 on the SPX, which is where the previous support was, and that's acting as resistance. Last time we were up here, last week, we got, thrown back down. So we're right there, button up against it again. And so this market's going to have to make that decision. And this is a really crazy week to have to figure that out. I actually don't think we're going to go much of anywhere this week. Well, I don't say that until maybe Friday, right? I'm not doing any trading until Friday this week because we have news left and right. Jolts are tomorrow. We've got PCE, we've got, all that stuff going on. Plus we've got earnings from Microsoft and Meta and Apple and everybody else. And then we got the jobs report on Friday, right? Now remember I think it was last week that the Fed's funds futures changed to doing 4 rate cuts this year and now scheduling the first one in June. But a lot of that's driven by payrolls, right? Because Powell and the Fed have said that that's what matters now more than inflation, right? So I think the payroll number on Friday is going to be the market mover. And until then, we may be down today, up tomorrow, down, but I don't think we're going to really go anywhere until that kind of shakes out. I'm sure we'll get some movement off the earnings and stuff, but in the end, I think it's going to take that payroll number on Friday. So that's kind of where we're at, but it's a natural thing. We went up about 4%. The last 4 days have been a nice rally higher in the markets, right back up to this level again. And so, it's at that inflection point, and I think we can stall out here for a little bit. I could see us just, we got our daily energies exhausted. The weekly's starting to charge back up, so we could just sit there in this range for a little while and really go nowhere until it has enough, whether it's the payroll numbers or other things that come up with trade deals and stuff over the next couple of weeks to really have the confidence to move higher or lack thereof, and does, this is the lower high, and we roll back over. So
Something
that's
else that's going to
where
be
we're at.
important is the GDP number on Wednesday.
Oh,
This
that's
is
yeah, I
for
forgot
first
that's
quarter.
out this week too.
Yeah,
Yeah.
so for first quarter, this is actually peak risk for the entire quarter,
Yep.
which this quarter ends.
Wednesday.
Well, no, the quarter
Or
ends. The quarter ends
oh,
at
the
the end
quarter.
of
Oh, sorry, the
June.
quarter. Yeah.
The quarter ends in June, so this is really peak risk of the entire quarter
Yeah. The only
we're
thing
going
we're
to have.
missing is Powell speaking.
Yeah, which is next week, and so this will
Yeah.
be really interesting next week. So to see where we tie up Powell, like if markets distribute after this week, that's going to put enormous pressure on Powell to do something. He's going to have to feel the need to do something, and to maybe just twist a verb here and there or something, just to give the market some hope in terms of, because nobody's expecting him to drop rates
Yeah.
next week. But
Right.
the as you said, the expectation is starting to build for next time, which would be in June.
4 cuts now too, which
Yeah,
that,
which is
that's
the only way
pretty
we're going to
high.
get 4 cuts into the end of the year is if we crater from here.
Yeah.
I just don't see it happening. I don't see a positive equity market leading to more cuts. Like what's
Yeah.
the purpose of that? So
So that's why it's interesting. I mean, and again, you and I were talking about this earlier, and you can bring up the charts, you can start kind of showing these levels and stuff. But and we've said it before, if this market sniffs out a recession, you're gonna get a pretty nasty drop, and if you're predicting 4 rate cuts now, maybe that's a sign that they do think things are going to be a little bit rougher. A lot of the macro data is showing it, and so it's just again, I think we've said it every week. The longer this drags on with these tariff things, the worse it can get. So
So one of the things, I made mention to the fact that within the next week or two, we're going to be hitting a tipping point. So when you have, so clearly we have a daily downtrend, right? So clearly daily downtrend all the way through here. And then what happened on Monday, in fact, this was not long after we wrapped up a week ago, is that we had a strong close on that Monday. And then the Tuesday picked up the baton and ran with it. Wednesday gapped higher. And so actually we left the week with a change in polarity back up to an uptrend on the daily chart. We now have a higher low and a higher high on the S&P cash index. Now what's happening with the weekly chart? The weekly chart has a lower high, lower low. This is only a lower high. This is nothing more than a lower high. And so for that to change, for the weekly chart, for this uptrend to propagate to the weekly chart again, we need some form of pullback. I don't see this happening. I don't see the price blowing through 5,800 to create a new higher high. So at some point, we need some kind of change in polarity on the weekly chart. So that if that is going to happen, it's going to happen in the next 2 weeks, right? Now, here's the missing thing. The missing thing from this, and we have one hell of a hammer candlestick on that monthly chart. But for us to go into full recession pricing and full bear market, what we're missing right now is a monthly lower high. And that typically, it could come from here, but typically comes in from a rally. And the reason why a rally is important is everybody has got to drop their guard. They have to set up a bull trap on here. We have to set up a bull trap for this to drop like this. I'm not saying that that's what I want to happen, and I'm not predicting that to happen. But the point here is that we're going to have a tipping point. Either we're going to rally up to a lower high and then drop from here, or the possibility exists that we start to drive above 5,800 and start to attack the all-time highs once again. And I think that's going to be decided within the next 2 weeks. I think within...
Yeah, so Doc, explain why you think that's decided in the next 2 weeks.
Because if you look at this, because we're looking for a pivot point here. We're looking for a pivot point. So one of the two things is going to happen. It's either going to break above these levels or it's going to break down below here. And so I believe that this week will probably, I agree with you, that this week will probably not go anywhere. I think getting above this volume profile level at 5,600 is going to be extremely difficult. So I think a good consolidation, maybe into Powell's talk next week, would be extremely beneficial. On the other hand, we could see the market start to drift back down, which is good because it sets up the higher low. So really, this is, I think what's going to happen here is in the next 2 to 3 weeks, so maybe by the end of May or so, we'll have a definitive answer to this. But really, it depends on whether this uptrend, this nascent uptrend here on the daily chart can propagate over to the weekly chart. Otherwise, what we're going to see is we're going to see a continuation of the weekly downtrend. Right now, the weekly chart is in a downtrend. That's got to reverse. Right now, the rule number one, according to fractal energy, is that larger time frames dominate the trend. And right now, we have a weekly downtrend. So this is on a serious tipping point right now. Either we generate this tipping point, which causes a squeeze to the upside, And you guys can figure out what it's going to take for that. So we're going to have to avoid a recession. We're going to have to see some deals cut in the next couple of weeks here. We're going to have to see the jobs market stay steady. We're going to have to see Powell maybe just hint at potentially softening his stance on rates. A lot of things can happen in the next 2 weeks. And I think by the end of next week, we will know which way this is heading. And it's going to set the tone for, think about this. By the end of May, if we know that we're rallying hard from here, it's more than likely not going to stop at 6,200. On the other hand, if we print a lower high here, if we roll over, and if the monthly chart shows a lower high, lower low, then here we go. Here comes the next bear. And so it literally could happen that quickly.
Yeah, and the other thing we've got too, I think just you can see it on there, is we've got a daily chart that's into exhaustion. So you've got that happening that I think is that's what's kind of affecting this week and the data and stuff and the news announcements and everything. But if you look at that weekly chart, it's beginning to charge back up. And so very natural, like today's action is exactly what you'd expect as you get into an exhausted daily chart, right? Which is where we're getting to. And then what we're doing though, if you look at the weekly chart, it's really just sideways action. We're not really going anywhere for weeks on end, really. We're just staying in this big wide range, but we're not really going anywhere. So that is charging the weekly chart up. What's going to be really interesting over the next few weeks is as some of those, like those big candles start to drop off, those downside candles start to drop off from this, that's going to charge up this weekly chart more. So mid to end of May, we're going to probably be in a position where we've got a very charged up weekly chart again. And that's the bigger time frame that really, is going to drive it. So that's the chart in my eyes to ultimately watch that energy when it's fully charged up and see which way it starts to break, because that's what led this down. It was a weekly swing lower, right? So if we get another weekly swing lower, like do the math, right? 6,200 down to 4,900 at the low there. Well, do another one of those on it, and you can understand where this thing could go. If it sniffs out a recession or whatever. Vice versa, right? Back the other way. And I think, Doc, you're right, taking out 6,200.
So here's the wild card. If we see another swing to the downside on this weekly chart, how much energy is available for the weekly chart to do that? Very little.
Yeah, there's not a lot.
And so this is where we may run into our the double bottom undercut. So a week ago, what we were saying is, like, after this swing and then the bounce up that we had on that Wednesday a couple of weeks ago, as we got to last Monday when you and I were talking here, I was saying, man, this is really, really short to retest the bottom. And I said I expected a few weeks up here in this level. But now we're going to be at the level within by next week that a retest of the bottom is not necessarily a bad thing, right? So if we do an undercut, I could show you guys all kinds of double bottom undercuts that led to amazing rallies. So we may end up trading some short-term pain for some incredible opportunities. So if we do break lower from here in the next 2 weeks, it's not necessarily game over. It's not necessarily game over because it's not going to have that much gas left in the tank to revisit the lows. And this will be really similar to what we went through. Let's see if I can find this one here. Like 2015, 2016 was very similar to this, where we did something like this, right? So we drop like a stone, and then we bounce around for a while, and then we retest the lows, and then look at this. We'd give our left arm for a rally like that right now. And then we did the same thing again, 6 months later. A double bottom undercut normally leads to an amazing rally from there as certainty comes back into the market. And it will be nobody will want to go long at this point because the conditions will be absolutely miserable. We are going to have people jumping out of windows, those kind of conditions. Now, I'm not predicting this. I'm not sitting here saying, that's what's going to happen. All I'm saying is that it's not the end of the world if we see the price drop from here in the next 2 weeks. So Powell, maybe we have some
especially
bad
on very
numbers.
exhausted energy.
Yeah, maybe we have some bad numbers this week, and then Powell comes along and he's Mr. Grumpy and Mr. Non-communicative, and he's doing as little as possible to communicate and to cooperate with the Trump administration. You'll see the markets drop from there. So it may not necessarily be a bad thing from here. So I think what would be the worst case scenario from here would be a rally back up, and that would be probably sometime later this summer, a rally back up that fails. That sets up the monthly lower high. So that's my point from right now. I think we're going to see a tipping point very soon here, which could set the tone for the rest of the year. But what I'm saying here is that a drop to the downside is not necessarily a bad thing. It could really goose this market up. It could set us up for months, and it will more than likely will lead to new highs if we do something like that.
Yeah, and this is a good week to kind of, like I said, I'm not trading until Friday for anything new. I'm exiting trades that I've got my profit targets on and stuff this week, and just kind of letting this thing play itself out. This is one of those weeks to just, let it just show you the way.
Yeah,
Because again, we're at that inflection point again. You can just see last time we were here, right? What we did the next few days once we hit it, right? So it's like, tell me what you're gonna do. Show me the way you want to go, and then we can take advantage of it.
there is
The
this
uncertainty's still there,
there's
right?
this
So,
whole notion of like there's so many tired notions in trading that we run into. One of them is finding a needle in the haystack, right?
mhm.
I'm gonna use the tools and the research in my broker's platform to find that one stock that nobody else can figure out, right? So that assumes that there's no money in Wall Street, there's no research, that you're gonna find some needle in a haystack that nobody else can find, right? So there's all these myths that we've had to sort of break through, and one of them is just looking to predict the future from this. I think the best way to look at something like this, everybody feels like they have to game the next move. Everybody plays earnings, like, hey, let's play an earning on this, and it's no better than a coin flip. And so
Yeah.
that's where we kind of pull back on stuff like that, because if it's no better than gambling, then what are we doing? We have to have
Yep.
an edge towards what we're doing. So like Dave says, just wait for the move to unfold and then just jump on board. I'd rather kayak downstream than try to, work
There
myself
there are
upstream.
there are extremely disciplined traders that literally do 2 to 3 trades a year and make all the money that they want to make for
Yeah.
the year. I mean, they are extremely, extremely patient. They have a very, very specific setup that they look for. And when it comes, they don't hesitate. They take it, but they go big and they go in and they win. And as I've gotten, you know, well, what I mean, 20 plus years into my trading career, the more and more, time goes on, I've become more and more like that. Like, there used to be, and we run services and stuff, right? So it's like there's this expectation, but although this impetus to find a trade so you can trade. But the more that I've grown and everything over the years, I think you've done this too. Like if it's not there, it's not there. There's no point in trading to trade or forcing something so you can say you did it. And this is one of those weeks that's like that. It's just there's no point. There's no edge this week. You won't know where this market truly wants to go until the end of the week, maybe even next week. So, there's no point to waste capital on it.
I look back, and when I first started trading, when I first, I fired Morgan Stanley, and I set
Mm.
up IRAs, and I transferred all my capital in, and the first thing I did was filled up my account with trades. I mean, I had every strategy that I was learning about, like, bull call, bear call. I was playing bull put spreads, just iron condors, everything.
Yep.
And it was an utter mess. I didn't know what the hell I was doing, right? So I'd make a little bit of money on some trades and I'd lose a lot on some other trades. And so that's the classic case of eating like a bird, crapping like an elephant, and what I had to learn was to pull back from all that stuff and to find an edge. And now it's kind of like when you are sitting there waiting in the wings, you're waiting for the right trade, and then it shows up and you nail it. That's awesome, right? That's what gets me fired up. Like 2 weeks ago, whenever that bottom was, like on March 7th, I think it was, maybe, where we had just dreadful conditions. And so I'm opening up the trading room, and we gapped way down, and I'm looking around at things, and all of a sudden I notice, like, whoa, we have negative 497 advancers over decliners. That means that there's literally no stocks advancing versus the previous day. So this is one of these dreadful Mondays that we've had lately.
Mm-hmm.
And I'm like, guys, I know this feels really bad, but I have to go long right now. I have to go long. And the easiest way to go long is to go long shares of stock because you don't have any volatility crush on something like that. And literally within 2 days, we had that extreme, great big, green candle. We took profits into that. We've already cleared the trade. And so those kind of trades, those are the ones that I get excited about because literally nobody else is taking that trade. Like, are you crazy? Are you nuts? The more it feels like I'm going against the crowd, the more that I get excited, the more I feel like, wow, we got something here. We're going against the crowd. And it takes a while to learn this.
The ones that feel the worst are usually the best ones.
Right.
That's the best way to say it. But yeah, guys, if you guys have any questions, shoot them our way. We'll go ahead and answer them. One thing that has been on a tear lately alongside this is Bitcoin. So if you want to talk about Bitcoin, I know we've been looking at that volume shelf there. Let's see is it starting to break through?
Oh no, it's doing exactly what it should be right now. I mean, that's the one thing about markets. No, I'm on the wrong thing here. There we go. Let's pull it over to here. That's the one thing I've noticed is that everything is doing exactly what it should be this week, right?
Yeah, the price action today is exactly what should be happening.
We talked about this in the last couple of weeks. We had this volatility coil. Range contraction leads to range expansion, which leads to range expansion to contraction. So we're in a contraction right now. And why are we in a contraction? That is because we had exhaustion. We have exhaustion right now on the daily chart. So this is, completely in exhaustion. This is going to be recharged within about 3 to 4 days. So by the end of this week, this is going to be ready to go. So that's playing along. We've showed the volume profile. This is called a point of control, that red line there. That is sort of the middle of all the volume. This is where everything is. When you're on this side of it, it's resistance. If you're on this side of it, it's support. So right now, old support has become new resistance. And so we got to break through that level a bit. And if we're able to get through that, we may be looking at about 120. That's my target for this. And I've been waiting for that for the better part of a year. But the other thing too, and this is where I get excited about analysis, is when you can add confluence to it, when you've got multiple things that are lining up. Now look at this. We always talk about the 61.8% retracement, which is right there. Notice how it lines right up with 96,000. It lines up with that point of control. It lines up with the high volume node there on the volume profile. Everything lines up. And it's also lining up with the fractals showing exhaustion on the daily chart. And when we combine that with the weekly chart, if we look at the weekly chart is all charged up. It's ready to go. We have polarity. We have trend to the upside. So I'm looking for this thing to break above 96. Now, if it can't break above 96, that could be the lower high. It's you should always challenge yourself and take the opposite side of it to say, all right, am I ready if this does something like that? Which is exactly what happened back here. We had a bounce, set up a lower high, and then got crushed, right? So this could happen, but right now it looks too good to not break through there at that level, because Bitcoin right now is being treated as sort of the anti-dollar. It's a dollar hedge right now. The dollar has been getting crushed lately. So that's all good. So I'm looking for, my projection on this is about 120 to 122. That's where I'm going to start to take profits. I started doing dollar cost averaging down in this area, down at the in the May 2023 timeframe. And so I've got a pretty good cost basis on this stuff right now. So taking profits into 120, with 1/3 of my position is where the exit starts. So that's Bitcoin.
So if somebody does want to, give themselves some setups for this, what would be your thoughts? IBIT, obviously.
I would say, yeah, the IBIT's it's good. Let me bring over, let's see. I'm going to bring over a chart of the IBIT. So the problem with a trading spot Bitcoin is that you can't really do much in the way of options with it if you are a US customer. So we've been using the IBIT. They've had options printed since November, and we were going crazy with the options initially on this thing, and we're back up to we've actually done really well with all this on the options. I'm way up for the year, even though the price has not gone anywhere. So what you can do is, if you're looking at the price just going nowhere for right now, but you're expecting a big explosion, this is where I've been using strangles on the IBIT. So if you go out maybe, I don't know, I don't think you have to go out more than maybe a month or so, and just set up long options at one standard deviation, which in this case is about 15, 16 delta. So just buy the 47 puts, and those are running about $66, and then the equivalent $63 calls, which are running about 66, 67. So for 120 bucks, you can set yourself up for the breakout, irrespective of which way it goes. So, if it takes off to the upside, great. If it drops like a stone, great. Doesn't matter. You're all set. Or you could do long iron condors as well. They're just a little bit less efficient for these. So the IBIT, yeah, I like the IBIT just because it's the biggest and the baddest of it is the BlackRock version of Bitcoin's ETF. Okay, any final questions, guys? We're wrapping up here in a couple of minutes.
Yeah, the only other one is gold, right? So gold continues its historic run, but like we talked about last week, kind of flat, right? From last week, it pulled back some. It's kind of hanging. It's pretty exhausted, so it's kind of setting up like it's flagging. Like gold's flagging again. Like if you follow the GLD and stuff, it's just flagging and getting ready probably for its next move here. So
no, this is interesting because it did not. So we had this parabolic move here, drops back down, sets up with a lower high, but does not confirm the change in polarity to a downtrend. Instead, it bounces off of that area. So I agree with you. I think this is just setting up as a consolidation flag and not necessarily a reversal.
Well, and I think I don't have time to go into all this today, but look up gold being changed back to a tier 1 asset and what that means. That's, I think, one of the keys to this and why we're seeing gold do what it's doing. Tier 1 puts it basically like on par with the dollar for usage in the world. And so gold didn't, believe it or not, gold wasn't up until starting a couple of years ago. So now that it's a tier 1 asset, it's literally can be used like the dollar, like US Treasuries in bonds and all that stuff in that same way. So banks can hold that instead of US Treasuries or bonds and stuff. So making it a tier one asset puts gold in a, at a new level playing field as a way to store wealth that was even better than it was before. So that may be why we're seeing some of the run up in gold too. And ironically, Trump tweeted the other day, who has the gold makes the rules, and there's been a lot of gold flowing back into the U.S. vaults over the last 6 months or so. So something to watch. So
Question from Boomer Trade. This we could talk for half an hour on this question. Trading the newer higher yield ETFs and stocks. The answer is yes,
yes,
but don't assume that those are a piece of cake, because they can
yeah,
come with a high degree of what's the right word with that? Just
nav erosion.
decay. Yeah, it's decay. It's just they're corrosive. So you get these really nice yields, but at the same time, you just we've been doing that on Bitcoin with BITO for about a year now, and it's just you got an asset which is screaming higher, and you just it's just sort of you get that yield, you get that dividend coming in, but you're not going to get any kind of capital gains on that. So it depends on what you want.
Yeah, and the dividend's starting to come down, right? Because
Yeah,
it was
it was super
it
high,
was
it was
like,
awesome, and now
yeah.
it kind of sucks.
Now it's like 30%. It was like 50%.
Yeah.
MSTY is the one that's follows MicroStrategy, and that was paying a 100+% dividend a month or two ago, and now it's down, I think, in the 70s, right? 70%. Still not bad, right? But it's I will say this, MSTY has some great options on it. It has some really well-priced options if you want to like sell options on it, but you gotta take into account that potential nav erosion from it. So that's those are a couple of them. There's a ton of them out there now. It seems like TSLL is on Tesla. It's cheap. It's like $9. You can play Tesla. It seems like all of them have it now. You just have to do some search on them. But yeah, they're better to. If you gotta selling at the money, making money, like if you're selling calls at the money and you want to buy some, that's great, but you gotta watch that thing just degrading in value over time. So,
Okay, I think we're good, guys. We're out of
yeah.
time, so thanks for joining us today. I can't wait until next week, where we'll get through peak risk of this week, and then we're going to be setting up towards Powell on Wednesday.
Yep.
So stay tuned, stay loose, and stay very, very nimble, because I think the decisions that you make in the next 2 weeks will really bear some fruit for this year. Thanks,
Yep.
everybody.
Thanks, guys.
Have a great Monday. We'll see you guys.
Yep. See ya.